Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here for Monday market moves, what happened last week in the markets, and what I expect for next week. Coming up next week for guests, we have Justin Huhn of Uranium Insider. We have Vince Lanci, precious metals and gold and silver expert, and Garrett Goggin. He is a junior gold and silver miner expert. So I had to reschedule the interview with Garrett. That was my fault, not his. So go to the post tab, submit your questions for our upcoming guests, and thank you for doing so. I will ask them on the air. Neil, thank you for the donation. You are a gentleman and scholar. And last week we had John Palladium, and that was a lot of fun. Got a lot of positive feedback from that one. If you like to make money, talk politics, and make fun of politicians' decisions, then that is the episode for you. Check it out. Alrighty, without further ado, let's go to the charts. Starting out as always with the S&P 500. So down 1.7% for the week. So last week thought that this one would go up and go higher, and we were right for 2 days, made a new all-time high, and then turned down, and on Friday just collapsed down to the 50 moving average. So blew right through the 20 moving average and settled right on the 50, setting up a almost picture perfect double bottom here. And yeah, I mean, looks like it's going to go lower next week. I would be watching this for support. That will be at 59.23, which would line up pretty well with this trend line that we've drawn. We'll see if it actually happens, but bias for next week on that one is down. All right, and run through the Mag 7 here real quick. So this is NVIDIA, so making up most of the S&P 500 are these 7 stocks. How do you spell bubble? You spell it NVIDIA, Apple, Microsoft, Amazon, Google, Meta, and Tesla. Apple, this is that chart. So it hit off the 200 moving average like we thought it would, bounced up. Looks like we're probably going to get some resistance there on Apple for next week. Microsoft just carving out a bottom right here. Amazon fell out of bed. This is almost a picture perfect bull flag right here. And without going too into the details here, but if you look at the histogram down here at the MACD, I mean, it just plays out really well. I'm going to be putting together a series on different technical indicators, cup and handles, bull flags, pennants, you know, a lot of the stuff you hear me talk about here. And so look for that coming. Google also fallen out of bed, had that gap down on their earnings, and then just continues to fall down. It'll probably get caught here by the 200 moving average, which is when traders will step in. Meta also fell out of bed, and Tesla is coming down. Got some news coming out of Canada. Looks like they're going to be, you know, kind of not bringing Teslas in anymore. That should be pretty interesting. I'm recording this on late Friday night, so we'll have more information coming into next week of what's going on with the tariffs and the sanctions and everything between the US and Canada. The dollar is down 0.1% for the week. Our bias last week was for it to hit 106.50. It did, and just kind of settled right out of there. Next support is really going to be the 200-day moving average, which is basically at 105, and the real support I see is at 104. John Palladium made a pretty good fundamental argument for this one, that as time goes on, the euro should get weaker, and this is the DXY, and most of this is compared against the euro. I think it's like 56% or something. Anyhow, most of this is compared against the euro, so he thought that the European central banks are going to be cutting more than the Fed, which would make the euro weaker and the dollar stronger in comparison, which would mean that the dollar should go up here on the DXY. Looking on the charts here, it looks like we got some downside, so it'll be interesting to see which one plays out. The 10-year yield has changed about 1% from last week. And it basically hit just like we thought it would. We thought it would come back down here to the 61.8% retracement. Oops, what did I do there? See this little button right here? Bam, undo. Love that button, saves you every time. I thought it would come right down here to the 61.8% retracement. Came within, you know, just a cough of that. and coming up for a double bottom. So I would expect it to hit here and then rebounds up. And when you run the Fibonacci extension on this, this should come up to about 5%. And the 10-year yield minus the 2-year yield, this is kind of interesting. Looks like it's putting in a little baby bear flag here, but hit right on the 50% retracement from the last run up and kind of did a little, almost a triple bottom there, just angling up. So might be a little baby bear flag to break down. It might be setting in kind of a triple bottom there to go up. I don't know. I'm a little 50-50 on this one. If I had to banana to my head, I'll say this is going up next week, meaning that long duration debt, the 10-year will pay a little bit more than it did this week. 1 month treasuries, your cash is still paying 4.3%. Yay. And LQD. So this one is kind of interesting. It changed about 1/4% for the week. So I'm going to set an alert on this thing. And how am I going to know when to really start paying attention to this? I will tell you how. It is going to be this software. That's how, TradingView. So check this out. This is how I'm going to do it. I'm going to set an alert right here. So see this yellow line right here is the 200-day moving average. I'm going to right click on that, not left click, right click, and click that, set an alert on the 200-day moving average, create, and bam. So once this crosses the 200-day moving average, I'll get an alert on TradingView and I'll know, like, hey, start paying attention to the corporate bonds and maybe start thinking about your put. You could also set it for a specific price point. You go right here, right click, and go add alert on LQD right there, and we will make it exactly 110 just for S's and giggles, and boom, there it is. So now we have an alert there, and then we got an alert on the 200-day moving average. Pretty cool, huh? So you guys can check out this software yourself. You can try it out for free with the link below. I thought you had to pay for this after 30 days, but my brother has been using this for free for years. So apparently the joke's on me. Now, he doesn't have all these cool indicators that I do, you know, all these moving averages and stuff, and the RSI and the MACD and all that, but you can still do some pretty basic stuff, you know. If you're just getting started in technical analysis, this is where you begin. So try it out for free using the link below. Thank you for doing so, and using that link, you're supporting me and my family, and there's no obligation. If you don't like it, well, it was free. Gold is up 1.8% for the week. So this one shocked me when we go here to the weekly here. So see that bar right there? I was really surprised. I said, when you get a weekly bar like that, basically 75% of the time it's going down. Well, we hit the 25 and it actually went up. So this is my surprise face. This is what it looks like when I'm surprised. And it went up to the upside. So delighted to see that. Now that we have this weekly bar, and if I go here to the daily, so we actually even hit a new all-time high. It's $5 higher than it was previously. I think it was $29.68, and then it hit $29.73. Yep, right there, $29.73. And so it got just a little bit higher. Now, hasn't broken this trend line right here. This is the 10 moving average. So if I had to guess here for next week, I would say 55% of the time this goes higher next week, and 45% of the time it goes lower. So the odds got better going higher for sure, even though we had that pretty nasty candle or bar last week. Bias is on the upside next week. I kind of like this. So this is pretty cool. All right, and and one other thing you can check out too is look at the RSI here. So watch this. If this sharply turns down, then this is going down. It doesn't matter. Negate what I said. All right, so gold divided by the S&P 500. So remember, we've just been waiting forever for this thing to hit the 50% mark. Basically, it would be 2 ounces of gold to buy 1 share of the S&P 500. Look at this. We are getting so close. We are closer now than we have been in almost 2 years. Okay, so we are right there, 0.491. Last week, we were 0.474. So gold outperformed by about 3.5%. It is smashing, as our brothers across the pond in England would say. So really looking forward to this. Hope it just keeps going. I would love to see the S&P roll over and gold just either go sideways or go up a little, and then we'll finally outperform. We just need like a couple weeklies, maybe a monthly close, and then once we get a quarterly close above this 50% mark, then it is going to go bonkers. All right, CEF, physical gold and silver on the stock market. I don't see any buys now. We got super high stretch technicals on all these gold stocks. You know, kind of looks like a topping pattern to me. You know, maybe we will hit that $3,000 mark on gold. I mean, you know, there is something to say about those round numbers. You know, the Dow Jones, when it hits 10,000, 20,000, 30,000, 40,000, you know what I mean? Those round numbers seem to mean something. When we go back here on the gold chart, you know, I don't think it's a coincidence that it hit right around 2,000 right here, 1, 2, 3 times, and then 4 and broke above, and then we're off to the races. You know, like humans like those round numbers, and 3,000 is the next one. So it would make sense to me if it went up to there. And when you run some of these extensions and retracements and you know, especially the cup and handle pattern, and project that up, it's just north of 3K. So it wouldn't surprise me at all if it got up there. All right, PHYS up 1.8% for the week. I don't see any buys right now. Looks like it's kind of starting to peter out. These are the lines that I would be looking at right here. I probably actually need to move these up a little bit. Let's move the yellow line up here around like $20.50 or so, and then we'll move the green buy line up around here around like 1960. We'll call it that. GDX down 0.7% for the week. So we took 20% off the table week before last. Might have a little bull flag forming here. It's kind of early to tell, but see, we got the pull right here and then just forming out here. I would love to see a bull flag form out like that. We'll see if that happens or not. GDXJ down 0.6% for the week. Kind of the same deal here. So look at the histogram down here on the MACD, and pull could be coming up here for a bull flag. Time will tell. Franco Nevada up 0.3% for the week. So almost took profits up here. Didn't end up doing so. Might get caught right here by the 20-day moving average. If gold goes down, that's not going to matter. We do have some earnings coming up in the beginning of March, so make sure you keep your eye out for that. And Wheaton Precious Metals up 0.8% for the week, so hitting all-time highs again here in Wheaton Precious Metals. We've got an all-time high here of $70.31. So if you want to take some profits here in Wheaton Precious Metals, might not be a bad time. And Gold Royalty Corporation, now this one's looking kind of exciting here, up 0.7% for the week. So it got caught right here by the 20-day moving average. Let me look at the weekly here real quick just to see. Okay, it's under the 50 weekly, so not fantastic there. But this also does look a bit like a bull flag here, and I'll just draw it out for you guys. So there's the pull, and then here's the flag right here. And just about a 90 degree there, so looking pretty good. So we'll see if that 20-day moving average holds or not. All right, and Altius, Patrick was asking about this one in the live chat, and as far as levels on this, so this is the one that has the 1.5% royalty on the Anglo Gold Silicon Merlin deposit. Okay, so along with Origin royalties. All right, so this is on the TSX, and you know, this is probably a deal now. Let me bring it out here to the weekly so that we can see it a little bit better. Remember, they're going to have some, they're going to find out what's going on here and how much their deposit essentially is worth after the arbitration is made public. I would be looking for, okay, see this 50 moving average right here is right about $24 on the on the TSX. I would be looking to hit that. And then if we go to the daily and the 200, it's around $20.50. So I would be trying to catch both of those and lining up with some back support right around there. That's what I would be watching for that as this comes down. You're not going to have a whole lot of time because this is going to get re-rated as soon as that information comes out. Now here on the OTC, yeah, you know me, and this is for Americans. I would be looking at this 200-day moving average and trying to capture that right there. Right now it's at 1766, but I would try to catch that as this comes down. That seems to be fairly reliable when you get some of these sells right here. Seems to hit right along there. Although if you don't want to wait and just buy it now, I think it's a fine price, but I'm cheap and I would wait. All right, Origin Royalties. So super excited about this one. So Anglo did their updated, what the heck was it called? I can't remember if it was a PEA or, anyways, they drilled out some more and they added an extra like 3 million ounces to this thing. I don't think it was 16.6. I think it was 16.3. Ninja edit. There we go. 16.3 million ounces now in this deposit, which it's just growing. I literally just got off the phone with Patty Nickel, the CEO of this company. He's going to be coming back on the show in 1 month. So I got a bunch of interviews scheduled here, so I couldn't get him on until the end of March, but we will have him back on, and hopefully that'll be right around the time, maybe just before or just after we get the information from Altius. So super excited about that. I think this is a deal now. If you want to wait, you know, if gold's going to roll over here, you'll be able to get this a little bit cheaper, probably be able to pick it up around the 200-day moving average. Okay. And Barrick Gold, up 2% for the week. So the earnings came out, shot up 6% a week before last, has retraced a bit. I've actually been thinking about selling this one and getting out of this one completely. Why would you do that, Steve? You've been in Barrick forever. Yeah, I know, but in the rural classroom, that's why. Joe Mazumdar just got back from his trip in Africa, and it was not a vacation, it was a working trip, and he did a presentation in the Rural Classroom Plus entitled, "Has West Africa Become Uninvestable?" And I'm seriously questioning my bets in that part of the world now. I would have no idea if I wasn't a member of the classroom, so join me. It's my favorite price. It's free. You can get the app on your phone. It's an app called Mighty, and you can listen to the content in the classroom on your drive to and from work. You know, heck, listen to it while you're at work. I'm giving you permission right now. Just tell the boss you were studying, which you are. He went over this presentation, and basically Mali is not looking so hot. Looking like they are probably going to steal more than they should, and Barrick may not even be able to keep. They've got 2 mines right now in Mali. I think it makes up about 15% of their company, and they may not be able to continue. You know, it might not be profitable for them. They thought that they were grandfathered in, and apparently the government wants more. I guess that's pretty common among governments. They like to steal more. So anyways, loved his presentation a lot. You guys can check it out in the Rural Classroom. There's a link down below and in the pinned comment. If you're a more serious investor, there's the Rural Classroom Plus, and you can try this one out free for 2 months. After that, when you love it, which you will, it is $39 per month. Adrian Day will be on next week, Wednesday, February 26th at 4 p.m. Pacific, 7 p.m. Eastern. I would love to see you there. And Newmont is down 2.6% for the week. So I thought we had a pretty good earnings, and it sold off. So maybe people are expecting a little bit better than that. Let me look at the weekly here. We've got, okay, so we're just above the 50, rising 50 weekly average. So that's good, but fell below the 200 daily, which isn't fantastic, but it is a rising 200 day. So hopefully it bounces back up from that. And Agnico Eagle is up 0.3% for the week. So this is the best gold miner on the planet. Just got caught there by the 20-day moving average. I moved up some of the lines here. So we got around $89 and then $78 would be the stink bid. So I think we got a little ways for this to kind of get washed out a little bit. I thought about selling my position up here at the $100 mark, and anyways, I didn't do it. Everything I own in this is free now because I took enough profits to pay for it and pay the taxes and all that. But I think I'm probably going to be just holding this position for the duration of the bull market. B2 Gold up 11% for the week. Really exciting. So I actually looked at these options. So I got two long dated options on here that don't expire until 2026 and 2027 at $2.50 strike price, which is where that yellow line is. So these are way in the black. Yeah, we'll see. My plan is to basically sell the first one once we get up to $3.40, which hopefully happens soon. We'll see. Equinox up 0.6% for the week. Told myself when this trend line was reached that I was going to sell. It reached, I watched it, and I didn't sell. I don't know why I didn't. I figure, you know what, this is a really, really good gold miner. I think that they're going to be, I think they're going to do really well. I think Los Filos is going to get sorted out down in Mexico. It looks like we got some positive results from that. So I fully expect there to be a correction here in Equinox, but I'm going to stick this one out for the long run. So, but if you want to take profits, now's the time, basically around $7. All right, and G Mining Ventures flat for the week. So moved past the point of concern on this one. So it was about 2% of the portfolio, and now it's free. So I think we're at like 1 or 1.5% of the portfolio now that we didn't pay for. So that's pretty cool. Thank you, Rule Symposium. That's pretty sweet. Yeah, like this company a lot. Tough to say anything bad about it, especially when you own it for free. And Rio 2. So this one's looking fantastic. Looks like this cup is starting to play out here. I really hope it does. So we'll draw it right here for you guys. So there's the cup, and the handle is just starting to iron out. We want it to touch down here on the 38 and then bounce up, and we will see if it will. So the retracement right down here, the 38.2% retracement would be at about 51 cents. We'll be watching that like a hawk. I think this one's going to do fantastic. I've been waiting on this one a long time. All right, and silver. Oh, one other thing that I saw in this one, this could possibly be, let me get this retracement out of the way so you guys can see it. We might have a bullish pennant here. So it comes up, comes down, and goes like that. So it's going to break one way or the other. I would prefer it break down because I'd like to get more of this for cheaper, but it might break up. And if it does break up, I don't think I could bet that. I don't know. I'm like a bottom picker. Okay. All right, silver. SoCal Silver says, cheers to you and your portfolio in 2025. Well, cheers to you as well, sir. I hope you make so much money in 2025 you don't know what to do with it. Silver is up 0.5%. Last week I said I would be surprised if it didn't hit the 20-day moving average, and it did not hit the 20-day moving average, so you get to see my surprised face twice in one video. Oh my goodness. Yeah, so it didn't hit the 20-day moving average. This one I'm really 50-50 on. I don't think I'm going to be much help here with the silver this week. Flip a coin, I mean, maybe it's, I don't know. Okay, like, so let's say down is pocket queens and up is ace king. So 52 to 3% of the time it goes down, 48% of the time it goes up. I mean, it's just right there. I really don't see it. There's a whole bunch of support around $33, and that's right where we're at. So I don't know how much help I'm going to be there. Okay, and gold divided by silver, it now takes 89.5 ounces of silver to buy 1 ounce of gold. So silver is really cheap compared to gold. Last week it was 88 to 1. PSLV up 1.1% for the week. So watch the rising 200-day moving average here. I don't see any buys right now in this one, but I see a first entry point here at $10.25 and then a stink bid down at $9.50. SIL is down 2.3% for the week, so just had a washout sell there on Friday. But looks like we might be getting a death cross, the 50-day moving average moving below or about to cross below the 200-day moving average. So I put these limit orders down here at 32 and 30. And SILJ down 3.3% for the week. Most of that came on Friday. Touched right on the 50-day moving average there. So this might be another candidate for like some covered calls here. I'm sorry, selling puts, at least on the way down. You could set them for $9.75 or $9. And Pan American Silver is down 0.1% for the week. So watch for this gap right here. So we got a gap around 22 to 23 bucks. Wait and see if that gets filled. It's got to break through the 20-day moving average, and depending on how long it takes to do that, it may have to break through the 50-day moving average as well. Frank Sinatra, old Blue Eyes, says, instead of selling and buying back core positions all the time, I like to sell covered calls when they get overextended. That's probably what I should have been doing here with Pan American Silver. I could have sold them up here at 25 and it would have hit. And then I could get back in when it comes back down here to the 200-day moving average, which it inevitably will. So maybe I'll do that here. Maybe I'll sell a covered call next week for Pan American Silver up at like 27, 28 or something. And Endeavor Silver down 5% for the week. So keep an eye on this trend line right here and see if that gets touched. But the level I like a lot is down here at $3. Looks like we broke. Yeah, looks like we broke down here, shifting down on the RSI, so I'd expect that to go lower. All right, and copper, paging Dr. Copper, down 2.2% for the week. Bias for next week is going to be down, so it just got super stretched. I mean, RSI got up there in the high 70s. Not surprised here that it turned down. First level of support is going to be the 20-day moving average, which is at, we'll call it $4.50. And then after that, it'll probably get caught by the 200-day, which is at $4.35. Copper divided by gold, and gold outperformed by 4% this week. So it now takes 647 pounds of copper to buy 1 ounce of gold. COP.U, we're sitting at a 15% discount right now. This changed about negative 0.7% for the week, but we're still sitting at a pretty good discount here for physical copper. Remember, trade some of your dollars for these physical commodities in these funds, and they should outperform Uncle Sam's greenbacks. COPX down 5.8% for the week. So as I remember last week, I sold a put for $38. I would love to see that thing hit, but if it doesn't, that's okay as well. I collect $45 contract. So that one expires, put myself on the spot here. I think it's March 17th. I guess I should have wrote that in here. All right, and COPJ is down 3% for the week. So I was talking about this last week. I think I'm going to wait for a little pop here in copper. Maybe I should have done it this last week, and I'm probably going to exit COPJ so that I can just start selling puts in copper. And I'm telling you guys, read Lobo's free report on copper. I think copper is going to kill it this year and probably even more in 2026. So we have to start positioning now and establishing our positions now. And you can find out exactly how to play it and exactly how I plan to play it by reading his report. It's free. It's in the link down below and in the pinned comment below. So check out Lobo's free copper report. And thank you, Lobo, for putting that one together. Freeport down 6.3% for the week. So massive downside on Freeport. I like these green lines right here at $36 and $33. These might also be some candidates for selling puts, especially when it's in a downtrend like this. Munduro Capital is down 2.5% for the week. Nothing new here. Still waiting on BHP to hit a massive drill hole. Go BHP. Uranium is down 1.6% for the week. Francis says, Steve, I'm just as mystified about this disparity between the uranium spot price and the longer term pricing. All these positive fundamentals globally, yet nobody cares! Exclamation point. Gold hits more all-time highs and even more crickets on mainstream media. Look forward to your commentary. Well, here's my commentary. We have Justin Huhn coming on the show. We can ask him whatever you want. So he and I were talking a little bit last week, talking about the megatons to megawatts program, about how there's rumors that Putin and Trump could be actually downblending some of these nuclear arms, and I was saying that could grenade this bet. And I after talking with him, I don't think it's going to grenade the bet, and honestly, I don't even think it's going to happen. He's like, we got to get through this war first. We haven't even stopped the war. Like, nobody's talking about downsizing their military machine, let alone downblending nuclear armaments. And even if they did, it's probably not going to affect this bet nearly as much as I thought. So make sure you guys get your questions in for Justin Huhn. And gold divided by uranium. Love seeing these ratios when you divide stuff by gold. Take pure money and whatever the next thing is, and then you get an actual price. And we can see here that uranium is getting pretty cheap. I mean, it wasn't that long ago that, basically a year ago, it took 19 pounds of uranium to get 1 ounce of gold. Now it takes 45 pounds to get 1 ounce of gold. So gold's gone up, uranium's gone down. That ratio is going to reverse eventually. When's it going to happen? I don't know, but I'm betting on it now. And I'm doing it through the Sprott Physical Uranium Trust, down 2.2% for the week. 66.2 million pounds. We're at an 8.4% discount. I found this. Okay, all you TradingView guys, check this out. Okay, we have... I was drawing individual lines on these before, and now we have a parallel channel. So look for this little thing here. It'll be up in this top one right here. You go down here and then go down to the, where was it? There it is, parallel channel. So I put it on my quick one down here. And you basically just line up one of these, stretch it out, and then pull it down to the bottom, and you can see where you actually get these channels coming in, and then it even draws the midline for you. You can put these lines wherever you want, but pretty cool. You don't have to like measure in between, and I didn't even know it had this thing. I think I saw it on another YouTuber. Oh, it was Garrett Soloway. I saw him have this. I'm like, oh my God, it already does it for you. That's fantastic. So anyways, parallel channels, and I think the closer we get to the bottom one here, maybe we'll get back down to $12. I would be shocked if we did. I would expect a reversal here pretty soon, but I traded a little more cash for physical uranium this week, and I got it at $14.76. And Cameco down 7.9% for the week. So, okay, blew through this one. The 200 moving average, then we got through this yellow line. So I think we need to move these down just a little bit. We're going to do the same on UEC. So yellow line hit, right? We can move this back down. So we have a gap right here. So pretty big gap. Gaps probably get filled. We'll move the stink bid on Cameco, and we're just going to line it up with some back support right back here. See, so it hit twice in August of last year, and then again in September of last year, and it hit around $36. Okay. Also lining up with some back support right there. Now we can move this one down here, and we'll close the gap. So we got this gap right here that's probably going to get filled. There's no moving averages right here to speak of to catch it. We'll look at the weekly. Now 200 weekly is way down here, so nothing there. Yeah, so I think that's a pretty good spot. Got a lot of price action back here. We got the gap, maybe down just slightly, and right about there. Okay, what's that price point? We'll call it 41.25. Okay. And then $36, maybe $36.25. I think last time I called 36 and it just missed it, so up that by a quarter. But getting pretty low in the RSI here, so I would expect this to reverse here pretty soon. And uranium, URNM. Okay, so this one is at risk of breaking down, and that is exactly what happened. Pretty exciting. So, I mean, now that I can see the future, I wish I would have held off a little bit longer, but move these yellow lines down. So we have a lot of price action right here around 34. I think that's going to be our next line. and then stink bid at 30. I do not expect it to get to 30 unless we have a washout in the S&P 500. But see, this is why you have 20% cash, because you're getting paid 4.3% on that cash. And then when you have moments like this and you just get these washout sales, I mean, we could have a moment like we did in 2020 when oil went negative. I mean, imagine if uranium, for whatever reason, for a hot minute went back down to $50 a pound. Like, if you don't have that 20% cash, you're just going to be staring at the screen like, trying to sell your car to buy this stuff. Okay, don't do that. Just keep, 20, 15, 10, I don't know, 30% cash, whatever you want, but have some for these washout sales, because they come in a hot minute and then they go right back up. But anyways, these are, if you're making the same entry points that I am right here, those are the next levels I'd be looking at. 34, we have a breakdown in the chart here, and then 30. And URNJ down 5.3% for the week. So hit that green line that we're looking at right here. So I got in at 1750 is when the limit order hit. I think it hit within a penny of that or so. And so now we can move the yellow line. So you got your first bid in here. Now your second one, your stink bid. And now that the stink bid hit, we realize, well, heck, there could be even more of a stink bid. So we'll move this one down. We'll put this down around maybe $14, $14.25, $14.50, somewhere in that range. And then we can move this yellow line down. And all I'm doing is I'm just lining up with some price action back here. So we got it right there. That looks pretty good to me. I would say 16.25 and 14.25. Those look like pretty good levels. AMP says, Kevin at North Star Bad Charts just put out his market forecast yesterday. So this was 4 or 5 days ago. And he showed how uranium and uranium miners broke crucial support Friday and could be in trouble for a while if they did not pop back up in the next couple days or so. So I see exactly the same thing. We broke that line. I mean, going back here to URNM, I think we can basically get rid of this thing, right? And start looking at horizontal line support on these charts. So really exciting. It's getting cheaper by the minute. Set your limit orders. UROY down 4.3% for the week. So your limit order hit right here at $2.15. So we can delete this one, get that out of there. Now your stink bid is going to be down here at $1.90. So a lot of leverage on this one. They, I just did the math. They have 2.25 million pounds. I think it was like 2.48 million pounds of U308 on the books. And so right now at $65 a pound, that's worth $150 million. Well, the market cap of this thing is like 180. Yeah, 180 million pounds. So on the low side, that means that all these royalties are worth 130 million. If you take the term pricing, then the term pricing would put this uranium at $81 a pound, would put this uranium worth 200 million, meaning that all the royalties on their books are worth only 80 million. And I think they're worth far north of that. But as we know with uranium, and the reason we love it is so volatile, these things can have washout sales and just get absolutely stupid cheap. And I think that's what we're about to see. Uranium Energy Corporation. Okay, another exciting one here. Just broke down below this, so we can get rid of this yellow line now. Oh, before I do, okay, so here's what I wanted to illustrate. So remember we were talking on this one and I was saying like, okay, if it hits around, if you wanted to get into this company and you haven't had any yet, you could do it right here on the 200 moving average and place like a 10% bet, right? So the way I like to do these is I like to set maybe 3-4 limit orders, right? And just like you saw us do with oil. And basically, so your first one there is on the 200-day moving average, which was around $6.65. So let's say 10% of your bet was that, right? Next 20% of your bet is going to be right here on this yellow line, this $6.25. So that one hit, right, and moved through it. Next one is down here that we've had down here for a while, $5.50. So then you place another 30% on that one. And then your final one, so assuming that one hits next week, it probably will. And then you place your final one down here at maybe $4.25. Alternate H, there we go. And that will be your final bet, right? Oh, I put $4.50. Actually, now that I'm looking at it, though, I kind of like $4.25 a little bit better. But anyway, so we'll just put this at $4.50 just to illustrate a point. So You place 10% at 625, 20% at you place 10% at 665, 20% at 625, 3% at 550, 30% at 550, and 40% at $4.50. So your average cost after all this is $5.36 a share. Does that make sense? So you add up, your 100%, and you get an average cost of $5.36. So when this reverses, you can get in the black pretty quick. That's exactly what I did back here. I placed 3 bets, and unfortunately for me, I didn't get a full bet in because I did 10, 20, and then I did 30, and the 40% bet that I had down here at $2 never hit. That's the risk you take. But anyways, this thing had a massive run. I moved past the point of concern. Now I own this thing for free, and you guys can do the same thing here again, and I think it's very, very likely to happen. Okay. Oil is, WTI is down 0.5% for the week. Not looking too good here on oil, looking like we're going down next week when we kind of zoom in here on these last few days. So see how we have an up bar, up bar, up bar, and then we just got this mass. It's not a bearish engulfing. A bearish engulfing would be if this bar completely engulfed the previous day and then came down. But usually when you have those three and then you get a bar looking like that, I would say 80% of the time this is going down on Monday. And Brent is also down 0.9% for the week. So it got a little bit of a floor right there. This one's slightly different because we got like 4 bars going up, 1 bearish engulfing going down, and then this one actually could have a little bounce, which is kind of weird. But I think they're both likely to go down. WTI more likely than Brent. And gold divided by oil. Gold outperformed by 2.3%. So last week it took 41 barrels of oil to buy 1 ounce of gold. Now it takes 42 barrels of oil to buy 1 ounce of gold. XLE, our favorite oil ETF. So looking pretty exciting here. This is basically, we had, let me show you here. So we had a Fibonacci retracement, and that is just this, hit right on the 61.8. So that's where this comes in kind of slick, and we can run a, where are we there? We can run an extension, and we go from here to bottom to top, and it should hit right around where we drew the white line already, 98 at some point. Now, in the short term, I think we may have a little bit of a pullback here, and that is simply because we've got a bit of a bear flag forming, and we just go on the opposite here on the histogram. If this starts to angle down, I think we could have a bit of a bear flag going that way. Now, kind of looking the same here on XOM, ExxonMobil, so got a long one here, and then out, and not quite as clear of a bear flag, but yeah, we'll see. I would like to see this come up and touch it, and then I would feel like it would form more of that rectangular pattern for a bear flag, but we shall see. And Chevron is up 1% for the week. Same kind of thing for an extension. This does not look like a bear flag to me, even though it's an oil company. See how it's just kind of a V-shaped right there? That doesn't look anything like it. But when we run the retracement, you can see right here hits at the 61.8% retracement. Not a coincidence. And then when we run the extension, we'll get something similar. And boom, and boom. 169 would be the target for the upside. First, we got to get up to the 61.8 right here, which is back at the previous, which is at 161. If it breaks through that, then it's very likely going to 169. And CNQ, Canadian Natural Resources, down 0.5% for the week. This thing's in a downtrend. I don't see it reversing anytime soon. So limit orders, if I wanted to get into this for the long term, would be at 29.25 and 26.50. And Blackstone Minerals, we might have a moment coming up here. So we just hit the ex-dividend date. It's going to pay on Tuesday of next week, the 25th, and they have their earnings here on the 24th, so on Monday. So remember, when we get these dividends and we get these earnings, oftentimes they're really nice spots to run these little options. Not always, this one wasn't, but this one here was, and this one here was, and they paid off handsomely. And I guess if I was really paying attention, I probably should have done this on Tuesday of last week, but I think we'll still probably get a moment on Monday where we can run it. And freehold royalties up 0.7% for the week. Remember, 9 cents a month per share. Like limit orders where both these green lines are. Well, we're under that one, so put a limit order at 12.25, and that will yield you an 8.8% dividend. Natural gas absolutely killed it this week, up 13.7%. So when we run this retracement, it goes to $5. So just the same extension from there to there down, and it runs up to $5.13. I moved up this resistance line right up here. It's almost like we got a little double top right here. So, you know, if I had to guess, I would say that natural gas is probably moving down next week, but we'll see. And Devon is up 8.2% for the week. So it had an absolutely just killed it on earnings, looking fantastic. As long as oil's above like 65, 70 bucks a barrel, Devon should just be doing very, very well. I like this one a lot. We had a nice little gap up here. That gap down here never ended up hitting. Doesn't mean it won't, but we got another gap to fill before that happens, and that's right around 35, 36 bucks. We'll see if it happens, but you know, just shot right back up here to the previous high and then corrected a little bit. I would expect next week this will probably go down. And Woodside Energy down, is that 6%? Or is it 0.6? No, 6%. Okay. Down 6% for the week. Probably should have got out of this thing a while ago. Yeah, I fully expect to liquidate this. I've got a sell order in here for 16.25. That may not even hit. We'll see. And Birchcliff. Okay, so this one I brought up on the TSX simply because there's more volume here. So I think we could see the pattern a little bit more. And it looks like we got a bit of a bull flag here. So that's pretty exciting. So we basically have the pole going up, across, and across. I would expect this would probably come down. Maybe we'll hit the 50-day moving average before we finally break out, but looking pretty good. See how we got pretty big volume coming in and then decreasing volume. This day's an anomaly. And once it breaks out, we should see the volume go up like we did in the poll. We'll see if that happens. This is the OTC, over the counter. I actually found out about this company last year when I was in Boca Raton for the Rural Symposium. I was talking with other attendees like myself, and they were really, really bullish on Birchcliff. So I started picking Rick's brain on it, and here we are almost a year later. It's 2% of my portfolio, and we are actually starting to make some money from this thing. I think we're up about 16 or 17%. So lo and behold, the Symposium is coming up again. I am really looking forward to it. I already have the room booked. I've got my plane tickets. I am set. John Pallamy, after we recorded, he was like, you know, I'm going to be out there. I can't wait. We're going to record some episodes together, so that's going to be a lot of fun. I would love to see you guys there. You know, with the information that you get from this symposium, from talking to Rick, from talking to the experts that he invites, from the companies that he invites, who are only invited if he has them in his portfolio, so they're already vetted, right? And the other attendees, you will pay for your trip with the information that you learn. I did last year, and I'm going to do it again this year. And if you can't attend live, there is a live stream that you can enjoy from the comfort of your own home. The link is down below. I hope to see you there. It is going to be a blast. It's a lot of fun. It's really cool. It's a small symposium. You know, last year I think we had 600 people there. So you see all the same people every single day. You know, Danielle DiMartino booth. These guys are just presenting and then just coming out into the aisle, and you can just talk to them and pick their brain. You know, it's really cool. You get a lot of one-on-one time. So really hope to see you guys there. It's a lot of fun. All right, and Pato is up 4.1% for the week. No, a lot of you got lucky right there. That is fantastic. Still like the stink bids for $9.75 for the newbies that weren't able to catch this one or this one, $10.65, and then a stink bid down in here for $8.25. And thermal coal up 1.1% for the week, and just holding the floor there at 105. And met coal is down 0.8% for the week. The coal ETF, the only one that exists, is down 2.8% for the week. So we're 10.8 million assets under management, and they're issuing more shares. I'm not really sure why they're doing this. I don't know if they're trying to make the stock price cheaper, if something dictates that they have to. I don't know if they're rebalancing or what they were doing there. But I pulled the limit order for $18 just because I want to kind of see how many. The thing's not really worth any more or less as far as I can tell. It's just that they've issued more shares, so the price has dropped. Still the same amount of assets under management. So anyways, I want to see, I need to do the math a little bit more on this and make sure that I'm not overpaying. So anyways, that will be up by next week. And Glencore down 9.1% for the week. So we bought more a week before last. And I think the next limit order, I got it set down here. Looks like a good stink bid is going to be around $7.75. There are some rumors flying around that they may be pulling off the London Stock Exchange. And if that happens, I would expect that this would re-rate to the downside and you might get lucky. So I would be, if you wanted some Glencore, I'd be setting your limit orders basically going down here just in case that happens. And AMR is just absolutely getting smoked, down 8.5% for the week. I'm down over 30% in this thing. One of the worst performers in my portfolio. Met coal is approaching hated. I don't think it's quite hated yet, but it's getting there. We need to get to the jilted lover stage, and then we should have a reversal on this thing. BTU getting smoked, so this option just completely expired, worthless here. Nothing happened with that one. I guess 6 out of 7 times of trading this isn't bad, but yeah, 7 times the charm did not work. As far as support on this thing, I mean, what do I got drawn here? 1425 and 1075. Hopefully these things will hit. We'll see. And platinum is down 3.1% for the week. So almost had a breakout there, just came right back down, settled on the 200-day moving average. Still like buy orders around 925, 900 for platinum. And PPLT, this is an easy way to buy it on the stock market. Same limit orders that we've been talking about forever, $85, $82.50, and $80. Palladium, same thing, down 1.8% for the week, hitting right on this 200-day moving average, so got some support right there. I think now is fine, but I like 900 even better, and assuming that nothing fundamentally changes here, I think it'll hit. I think that the all-in sustaining cost of a lot of these miners is north of where it is now, so I think now's a deal. I think we're getting close to a re-rate. And PALL, so physical palladium on the stock market, same kind of thing, same limit orders, 83, $80, 85 for a starter. And SPPP is right around that 200-day moving average. I like the bids here at $9 and $8.75. And then a real stink bid in down here. I mean, if it gets down to $8.25, I'm buying more. And platinum divided by gold is historic. I'm sorry, platinum divided by silver. And last week it took a kilo of silver to buy 1 ounce of platinum. Now it takes even less. It takes 30 ounces, well, 29.9 ounces of silver to buy 1 ounce of platinum. Really cheap. And gold got even cheaper. And you can now trade 1 gold coin for 3 platinum coins. And if you are a speculator, I would do so. I did. Okay, nickel is, let's see, up 0.7% for the week. So just coal's got some competition for the most hated commodity. This thing has just been in the dumps. NIKL, 2 worst parts of my portfolio, nickel and coal, cannot catch a bottom on this thing. We'll see how this one irons out. I think eventually nickel sulfide is going to turn around, and I hope to capitalize on that with this company, Centaurus Metals. Here's the parallel channel again. So check this thing out. So this is on the ASX. So just a lot more volume here so we can see it a little bit better. I mean, you could argue, I guess, that this is a giant bear flag coming in. So we might actually be getting even a little bit cheaper on there. I prefer to think of it as a little bit of a just a parallel channel, and we're kind of at the bottom end of this right now. So if you did want into this company, here's how you could do it on the ASX, and then Centaurus on the on the OTC for Americans. You could do it right here as well, although I prefer, I guess, because I'm thrifty, a limit order of 21 cents, which will probably hit. But once you look at this parallel channel right here, I mean, that's pretty compelling where we're at now. And pull this one up. The Bloomberg is, where are we at? Next page, up 0.9% for the week. So looking like this one is on the verge of a breakout right here. So I look over, guys' portfolios that, they're not always able to, just buy whatever willy-nilly stock that you want. So sometimes you have to bet on these big indexes like the S&P 500 or the Bloomberg or whatever. And I think we might be actually getting close to a breakout right here. Check out, if I draw a horizontal trend line, I mean, we are just tapping on some previous highs right here. I think we just needed to close just a little bit higher right there. Now, pretty high on the RSI daily, weekly, and monthly, but kind of compelling in that it looks like we're just about ready to break out of this. There's a lot of resistance right where it's at now. And so it would be significant if it closed the week and the month above that, which would be around, 109 or so. And iron ore is up 0.3% for the week. So trading kind of in the middle of the range here. BHP finally catching a bid off that bottom down there of 48.50. I don't really see a buy here, kind of middle of the road RSI. We do have a dividend coming up, so that's awesome. We might be able to catch a option on that, just like we did back here. Oftentimes it'll sell off just a little bit. Let's see, when's the ex-dividend date? So March 7th, so keep an eye on that. And Rio Tinto is up 0.3% for the week. So limit orders down here at 58.50. Everything's kind of middle of the road, hit the 200-day moving average and bounce down. And our favorite metals and mining ETF, PIC, down 1.4% for the week. I don't see any orders or anything in right here. I don't really see any patterns other than limit orders for 35 and 33. And Bitcoin is up, I believe, let's see, up as of this moment, 0.25%. So I think this is the level that we need to watch, and we'll just see how it plays out. 92,000, it's hit many times right there before. Keep an eye on it. If it does hit that and create a reversal bar to the upside, I think you might be able to catch it in one of those Bitcoin ETFs for a little trade. So thank you guys for always being here. Be sure to check out the Rule Classroom. Hope to see you in Boca Raton. It's going to be July 7 through 11. So it's coming up. Get your tickets. Check out Lobo's free report on copper and try out TradingView for free. All the links are in the pinned comment below and down in the show notes. And if you want to support the show, there's a PayPal link down in the show notes below. Thank you for always being here. Support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You guys have yourself a great rest of the day. Thanks for always being here. Love you guys, and we will talk to you next time.